caught it. Anybody else see that Spider-Man catch I just made on my phone? The wind is so strong right now. It's probably like, I think it may be like 15 mile an hour, 20 mile an hour wind gusts tonight. But thanks everybody for joining. Apologies for being late. It was... Well, I didn't catch that one. Close, but didn't catch it. No cigar. I'll have to put you guys on the ground for now. Let's see. Give me a minute. It's actually probably like 30 mile an hour wind gusts tonight. I bet if I didn't say anything, I probably would have worked out. All right, everybody, just bear with me, setting things up. All right, we'll go ahead and get started. Actually, let's do the video and audio check. So if you guys can hear us and if you could see in 1080p, go ahead and give a thumbs up in the chat. Also, if you refresh your web browser, you should be able to rewind. Apologies for being late. It was a pretty busy day at work. It's a nice night, but it's windy. We'll get started here in a moment. Have a lot to talk about. So thank you all for joining. Oof. All right, well, we'll go ahead and get started. So good evening, everybody, and welcome back to Walks in Wall Street. Today is Wednesday, June 5th, 2024. It's about 10:03 p.m. Eastern Time, and we are reporting live right here from South Beach. You can see these beautiful palm trees. It was a beautiful day today. It was probably 86 degrees, bright sunshine, a few clouds in the sky. Once again, apologies for being late, but it was a pretty busy day. Now, record-breaking day on Wall Street. The S&P 500 hitting a new all-time record high, up 62 points, closing the day at 5,354 on the S&P, up over 1% on the day. So the market is crushing. If we go over to the NDX, which is the NASDAQ 100, we also hit fresh new all-time record highs on the NASDAQ 100. That was up 380 points, closing the day at 19,035. NASDAQ 100 up 2% on the day, so tech having a really good rebound. All those leading stocks having a really, really good day, and the Dow 30 as well. So pretty good day to be invested in America, despite all the naysayers of the market. And that's kind of going to be the main topic of conversation tonight is, well, I guess I'll just read you the headline. And as you know, if you've been watching Walks on Wall Street, tuning in, we've essentially had a bullish bias on the general market, I should say probably for about a year and a half, ever since we've been emerging out of this base. And, you know, I would say most major stock analysts the big names that you watch, we're on the wrong side of this market with a few exceptions, right? Like Tom Lee, nailed it to a wall. But what's wrong with the vast majority? I shouldn't say what's wrong with vast majority of Americans. What's the perception? What's wrong? So here's a headline from MarketWatch. It says stocks are up 12% this year. It's actually up a little bit more after today, probably up 15%. So stocks are up 12% this year, but nearly half of Americans think they're down. What's going on? So we have some new polling data that came out. Most Americans think that unemployment is at all-time record highs. It's actually at all-time record lows. Half of Americans, 50% of the country, think that equity markets are down. But this is one of the strongest bull markets we've ever seen. What is wrong? Well, I have a few, I actually have an interesting thesis. Maybe you guys will agree, maybe you won't. But this is actually overall bullish for the equity market. Many people say there's irrational exuberance. Many people say that the market's a little bit frothy, but the data shows. And if you poll most of Americans, which is Main Street, not Wall Street, this is Main Street, like your neighbor, your friends, the coworkers at the office, according to the surveys, 50% think that stocks are generally down. We'll talk about a few reasons maybe why. Now, before we get this kicked off, tomorrow we will be live not from Miami. We will be live from New York City. We are going to be back in the big leagues tomorrow. So hopefully you all enjoyed Miami, Florida, but it's time to get back to New York. We will be back live from Billionaires Row, New York City, 57th Street tomorrow. We'll take a quick, what's going on with my phone tonight? We'll take a quick look at Bitcoin and gold, by the way. Gold is over $2,300 an ounce, performing really, really well. And Bitcoin now over 71,000. I think we're going to blow right past the highs at 73,800, and I think we're probably going to hit 80,000 in short order here. So just give me a second. Let me go ahead and close up the laptop. We'll get started. Thanks everybody for joining again. All right, little technical difficulties at the beginning, but that's all right. All right, let's see who we have in the chat. I see Alan. What's going on? I see Lance. What's going on? Richard Vogel. Shannon is here. Dario. Good to see you as always. New England Crypto. What's going on? Lori CO. Brad's Brain is here. Gary Carpenter. What's up? Sunshine After Rain. Always a pleasure to see you in the chat. So we're on Collins Avenue, the main drag here, Florida A1A. This is 24th Street. We're gonna head a little bit deeper into South Beach, but it's gonna probably be a short stream. I gotta be up early to catch a flight. Ed Dunkel says, have you talked about Roaring Kitty? We haven't talked about Roaring Kitty. I mean, I think in the past we have. I honestly kind of been, like, I gave my opinions on it, but I don't think it's as big of a story as many people are making it out to be. I think a few streams ago, as we're right here at the One Miami Hotel, which is a really nice hotel. They have these pretty cool cabanas. They have a really nice lobby, and the it's a declining business, GameStop. Let's see who else we have here. Hey, Solo401, what's up? Jimmy B, good to see you. Cape Cod Sarah, welcome. Now, I have a quick question for the group here, because it's going to be a short live stream. And I want to talk about this today because the S&P 500 yet again hit a new all-time record high. The S&P was up over 1% today. The NASDAQ 100 was up 2%. 380-point move today at the NASDAQ 100, up 2% on the day and new all-time record highs. Now this market, and if you've been reading our newsletters behind the street, we've had a bullish narrative on the market as the S&P's broken out of this base. This has been one of the strongest markets I've ever traded through ever in life. But if you look at the polling data, the American people apparently are not feeling the S&P and the markets hitting all-time record highs. A survey came out, MarketWatch reported on this, and it says half of Americans, 50% that were surveyed, thinks the overall general markets are actually lower or down. They think the same thing for the unemployment rate. They think the unemployment rate is at all-time record highs. They think unemployment's at all-time highs. But in fact, the unemployment rate is at all-time record lows. So what does this mean? Why don't most regular Americans feel these great gains in the stock market? Well, here's my opinion, and then I want to know what you guys think. Most importantly, I want to know what you guys think. But here's my take. And we've talked about this almost to the point of ad nauseum, and I think this goes back all the way to the 2008 financial crisis. Now, if you look at a monthly chart of the S&P 500, the Dow Jones Industrial Average, NASDAQ 100, whatever you want to look at, since the lows of 08, it's pretty much been up and to the right. Amazing gains. Huge wealth has been created, but it's been a very, very lopsided recovery since the lows of 08. Now, why is that? Well, my opinion is that the Fed created an environment of extreme haves and extreme have-nots, the Federal Reserve. If you think about who has access to the most liquidity, it's wealthy people, it's rich people. So yeah, the Fed might have stimulated the economy and that allowed job creation, and most people have jobs, have good paying jobs. But simultaneously, it's created inflation. Now you might be saying, well, Tom, that's actually not true. Inflation's been running well below the Fed's target just up until recently, and you'd be correct. But it's created inflation in other things, such as in asset prices, in equities that we talked about, and in real estate. And if you think about who owns stocks in this country and who owns real estate in this country, well, it's the top 10% of Americans. The top 10% of Americans own 90% of all the real estate and all the equities. So when you see this data come out that says most Americans think that stocks are down, or most Americans think that the economy is not doing too well, kind of makes sense. Kind of makes sense, those surveys, because the recovery has been so lopsided. People who were wealthy got, as I like to use the term, and many of you think it's a little bit funny, cartoonishly wealthy during this recent bull market and during this recovery. But it's kind of left out most people, honestly. If they weren't invested in equities, if they didn't own their home, if they didn't own real estate, it's kind of left people behind. And it's made it very difficult because the valuations, let's just use the example of single family homes. It's gotten so expensive in some markets. I'll use Miami as an example. Home prices, some of them have gone up 50% in a year. So it's almost created an environment where it's unattainable for most people just to afford basic cost of living. But if you owned those assets, you did really, really well, because those assets were being inflated. I don't know, I think it's an interesting data point. I mean, what do you guys think? Does that kind of track or not? Silver Mines says inflation helps if you own your home. Me is here, what's going on? MD, welcome. Brad's Brain says, I think it's purely inflation. A large portion of people feel, oops, lost your comment. Feel that they don't look at the market daily. Interesting thought. Doc Seven says financial literacy is an epidemic. Even among those with advanced degrees. Sorry, my chat's going crazy tonight. So you just think it's a financial literacy thing, Doc Seven? Maybe. Oh, let's walk away from this. Peter says they have been savaged by the cumulative effect of inflation and feeling poor. Also, only high income people could fund their 401ks and get a company match, as lower income folks need all the money to live. That's a very good point. So you think there's no excess savings to invest. Kathleen says many aren't financially savvy and don't have a historical perspective, says Kathleen. Jack CW says, what are your thoughts on Best Buy? We'll get to that later. Zozo Bob says Miami real estate prices has to do with its limited geography. MD says if someone like Roaring Kitty can take 53,000 and turn it into millions, it's available to everyone, but most people are just trying to survive and either don't know how to invest or think the system is rigged. So I'm just trying to get to as many comments as possible. My chat's spazzing out a little bit because I think I dropped my phone pretty hard. Alex says, Tom, what you say makes a lot of sense and the data supports that view. Doc Seven says people are afraid of the market and think it's a casino, which is really unfortunate, by the way. Like, that's what a lot of people are saying. And you know, there's some big names, right? Now, not to say anything negative, but a big influential person that's recently in the financial media, Dave Portnoy, the founder and CEO of Barstool Sports, an unbelievable success story, incredible businessman. But he keeps repeating these same talking points that the market's rigged, it's against the little guy. It's not. It's not at all. I mean, that's such fake news. This whole GameStop and the meme stock stuff is just such bullshit. And I think people like Dave, in that aspect, do a real disservice to Americans that say, oh, just because GameStop isn't, going to $1 million means that, the entire financial system is rigged against the little guy. That's not the case. GameStop is nonsense, okay? Utter nonsense. And nobody should put any attention towards that, or AMC or any of this other nonsense. When you have some of the most powerful companies in the world that the world has ever seen. I mean, think about that for a moment. In terms of earnings generation, in terms of free cash flow, just sheer earnings power and revenue growth, we are living in it. You have the opportunity, and have had the opportunity to participate in that. So I think the whole narrative, oh, the market's rigged, it's not. So I think that's a good point. But the only thing I could think of, and I'm very sympathetic to that, is kind of what all of you are saying in the chat, where it's like, let's say if you're a single mother and you have a couple kids, right? I'm just making an example. You go to work every day, you really bust your ass to provide for your kids, send them to school, and you don't really have much money left over to then invest in all these great companies, or maybe to buy that rental property you wanted to buy, or buy that house that you wanted to buy. So in that aspect, right, employment is almost full. People have jobs, but they just don't have that much left over, to what many people are saying in the chat, to invest and take advantage of the price appreciation that's been had. But the people who do, and who have had assets, I mean, it's just gone to Pluto. It's just gone to Mars. So I'm not trying to blame the Fed for everything, right? I don't think it's all the Fed's fault. You know, you do have a fiscal side of the house. It's not only a monetary policy side of the house. But I will admit it is difficult on the most poor of Americans. But it's an interesting concept because I also do believe, on the other hand, that it's never been easier to climb the ladder of essential mobility, if you will, go from lower class to middle class to the upper class. It just takes a lot of grit and luck. I think luck has a lot to do with it. I mean, if you're a single person, right, and you don't have children to take care of, well, you're number one, going to be prone to take more risk. You're not going to be more risk averse, and you probably have a lot more left over from your paycheck because you don't have to buy food for the kids. You don't have to buy clothes for the kids. So I think if you're young and if you're single and you don't have any responsibilities, the opportunity right now in America to get ridiculously rich is there. Like it's game on. But you can feel overwhelmed if you're just trying to get by, you're trying to put kids through college, and you have bills. So I do see both sides there. And that's why, and I'm reading kind of the comments as they go by, just to kind of get some ideas here. Comments are going by so fast. There was one comment that was really good that I want to try to find. Man, I missed that. Anyway, it'll probably come back. Crispy says it takes money to make money, and most people are more apt to just hold on to the money they have or gamble it. Oh, instead of gambling it on something they don't understand. Yeah. I do also agree that maybe it is a financial literacy problem, but I don't think that's the whole problem. I guess I'll just kind of paraphrase the comment I saw, but I don't know who put it in there. The comment was, that's why inflation is so dangerous. And I totally agree, because 3% inflation, is it the end of the world for somebody who owns their home or owns a rental property and has, $2 or $3 million in their 401k or IRA? Probably not, right? Probably not. I mean, if you have a few $1,000,000, even if you wanted to de-risk from equities, I mean, look what fixed income is paying right now. You put some money in treasuries at 5%, or you put money at a money market at 5%, on 5% on $5 million, you could retire off that on just a fixed income with no risk, with no volatility risk, right? So I do agree that it's so critical for the Fed to, I'll say, the President of the United States, Congress, both sides of the aisle, really needs to focus on getting this inflation thing under control, because the inflation crushes the lower class and middle class people, really, really crushes them. I don't think most people, even if you're making a good income, you can't really sustain having your rent go up 25%. I know some friends in New York and here in Miami, when their rent came up for renewal, 25% rent increase. That's wild. That's really, really wild. Hey, Carol H, what's up? This is Hey Tom, you're really close to my place. That's awesome. Wow, nice. So you live right in the main drag here. Now, Carol, I got a question for you. Have you noticed that South Beach and just Miami in general is busier during this time of year than it usually is? I mean, it's June now. It's almost 10:30 at night. And the restaurants are pretty packed. This is off season in Miami. And this off season is busier than it usually is. And I think that's because you have a lot more, let's just say, sustainable businesses and job opportunities down here than you had before. I've noticed it even with the traffic. I wouldn't say it's usually like a ghost town this time of year, but it's usually not as busy as this. Anyway, I would like to get your thoughts on that. Hey, Norma Miranda, thank you so much for your very generous $5 donations. Says, hey Tom, I totally love your live streams. I'll be in Manhattan this Friday from Chicago. Hopefully I'll run into you and say hi. Oh, cool. Yeah, well, I'm gonna be flying back to New York City, please God, tomorrow. And I'll be in New York for probably maybe even the rest of the summer, depending on deal flow. So thank you so much for your very, very generous donation. Thank you so much. Crypto Ava says Bitcoin. Well, yeah, I mean, think about that. My thesis, and I know a lot of people don't like when I talk about Bitcoin. Look at the average price. I like to price everything in Bitcoin. Most currencies are going to zero against Bitcoin. So one of the fun things I like to do is, okay, how many Bitcoin does it take to buy an average single-family home in America? Right, and you could do a look back on the average single-family home in America in terms of US dollar denomination. Go back since Bitcoin was created. And how many Bitcoin did it take to buy the average single-family home in 2015, for example? And now, how many Bitcoin does it take to buy the average single-family home in 2024? And what do you notice about that chart? What do you notice? Instead of the opposite way, right, how many US dollars does it take to buy a single-family home? It goes like this. How many Bitcoin does it take to buy a single-family home? It's going like this, right? So what does that tell you about fiat currency? What does it tell you? Anyway. Hey, Sunshine NYC, good to see you. Thanks so much for joining us on this very, very late night South Beach live stream. Hey, JK is here. What's going on? Michael D says, hey Tom, I'll be down Friday from Cleveland, Ohio. The direct ticket was $98. Wow, love that. I think before the pandemic, sometimes I would spend like $70 one way from JFK to Miami. Silver Main says, bull market climbs the wall of worry. Oh yeah. You know, the last thing I'll say about Bitcoin, but I'll also tie it in with the major financial markets, that comment is spot on. Markets always climb a wall of worry. And how many pessimists were there on the overall general trend of the equity market? Even some, if you guys remember, right, when we were kind of just emerging out of that base on the S&P 500, I was taking some heat on the live stream, right, because I had a bullish bias. And there were many people even saying, hey, you know, you're leading people into the slaughter. When, first of all, I don't recommend people to buy or sell anything here. We just generally talk about the financial markets. But I was taking major heat here. I remember it quite vividly. And now you have equities at all-time record highs. and you have Bitcoin at all-time record highs, pretty much at all-time record highs, 71,000, and not one of my friends, not one of my family members texts me about, hey, should I buy Bitcoin? Should I, where do you think Bitcoin's gonna go next? Not one, not even one. None of my coworkers, anything. And I remember back in the bull market of 2017, right, when Bitcoin hit 20,000 for the first time, it was like I was getting hammered relentlessly with texts, calls from coworkers, from friends, from family, my brother, saying, hey, do you think I should buy Bitcoin? Do you think I should buy Bitcoin? What do you think? Radio silence at 71,000. This is like, I mean, this is what dreams are made of here, folks. Again, not telling anybody to do anything. This is just a general conversation. But when you have what I like to call the magic elixir, you have the fundamentals, right? You have the halvening that just happened. That's a major bull catalyst. You have sustained inflation, right? Running hot above 3%. You have geopolitical risk, uncertainty. You have, I think the number one thing, you have the uncertainty with the US election. You just had the Mexican election, which was a horrible reaction. Again, I don't want to talk bad about the newly elected Mexican president, but from what I'm hearing, socialist policies, not pro-business, not a good look. And you have commodities crushing. You have Bitcoin crushing. Precious metals, gold, silver, you know, gold trading at the upper end of that handle. This is like, this is it. This is it. If you ever read Reminiscences of a Stock Operator or just watched, what I would do is go watch all of the Paul Tudor Jones and Stanley Druckenmiller Robinhood Investing Conference interviews. And not Robinhood like the scam brokerage. I'm talking about the charity. There's this big JP Morgan Chase finance event. It's like a charity fundraiser. It's called the Robinhood Foundation. And oftentimes Stan Druckenmiller and Paul Tudor Jones will host a keynote and they'll have a conversation, like in conversation with Stan Druckenmiller, Paul Tudor Jones. And they kind of talk about these situations. If you do an audit of their best trades, right? When Stan Druckenmiller got his start working for George Soros, right? Many people don't know that. Stan Druckenmiller, noted to be one of the greatest investors or traders of all time, he got his start under George Soros, who is, regardless what you think about him with the politics, don't want to blow up the chat, just in terms of trading and investing, one of the greatest of all time in terms of massive risk-on position size traders. You can kind of see these similarities setting up in the market, and I think, well, what has been commodity cycle has been ripping. Precious metals in gear and Bitcoin in gear. So we'll continue to watch. I want to take you guys to Espanola Way, just because we're only going to be on for probably about an hour. But if you're looking for something to do this weekend, pull up another YouTube webpage and just type in Paul Tudor Jones, Stanley Druckenmiller, Robinhood Investing Conference, JP Morgan Chase, and there's going to be 2 about 1 hour conversations, and I would just play those on repeat relentlessly in your ear pods or whatever, however you listen to it, because those are the best to ever do it. Mimi says, is it safe here? You know, to be honest, there's been a little bit of an uptick in crime in Miami, I've noticed. Hopefully it's just an anomaly, but there's been some crazy stuff on the news. Hey, MBA Elias, what's going on? We're going to wait for the light here, and we'll check out Español Way. Kimberly is here. What's going on? Carl Roth says, hey Tom, any thoughts on Canada lowering interest rates ahead of other countries? Well, I think Canada is really going to need to stimulate. And you're seeing the same thing in China, actually, by the way. China is easing, and I think they're going to continue to ease big time. And they kind of need to, because China is in a real estate disaster. Now, on the flip side, and I know everybody's going to call me a permabull, that is massively bullish for global liquidity. Massively bullish. China easing. All right, everybody, here we are at Español Way on Washington Avenue. What do you guys think? It's quite nice. Landscaping's beautiful. You have a lot of this outdoor dining space. It's essentially just a complete row of restaurants, bars, coffee shops. Joel PM says, I've seen way too many BTC dumps. When it's time to get out, they get out fast, and it can be a real race to the bottom. Very true. Yeah, I'm not advising anybody to buy it. If you don't understand it, you shouldn't buy anything you don't understand. An interesting thing though, Joel PM, with all of these spot Bitcoin ETFs being approved, I think that's going to impact the liquidity pool in a massive, major positive way, and that should kind of reduce a lot of these flash crashes. Like, if anybody remembers trading Bitcoin, or maybe you were in college at the time in 2015 or 2014, 2013, 2011, and maybe you were buying stuff on the internet with Bitcoin, maybe you shouldn't have been buying, you'll remember these massive flash crashes where Bitcoin would, in 3 seconds, decline $500, $1,000, $2,000 mini flash crashes. And that's because nobody really used it back then. There was no liquidity. So if you had a big whale dump or sell, it would crash the price. This is a good Italian restaurant. The vibe here is 10 out of 10. And for a Wednesday night at 10:30, there's quite a lot of people out and about, which is good. It's good to see. I like the inside of this restaurant. Has all like flowers, even on the outside. It's pretty nice. But what do you guys think? Español Way. I'm excited to get back to New York. A long time. Now, what I will say, and this is not to get intentionally political, but I think it's relevant to talk about because we are in election year. We're less than 6 months away from electing a new president. This is just a hypothetical scenario, right? If I was, let's say if I was hired by the Biden administration, right? which it would never happen in a million years. Let's just say they hired me, and then all of this data is coming out, right? Saying that over 50% of Americans think that the stock market is down. Over 50% of Americans think that the unemployment rate is spiking to the highest levels it's ever spiked. Well, what does that mean? You have a big perception problem. And over the last, I'd say, 3 weeks, particularly with that veto, with Joe Biden vetoing that crypto bill, I think whoever is advising the president, number one, needs to get his or her head examined, and number two, really needs to get fired. And I'm not a Biden guy. I'm a conservative, I would be more right-leaning. But if you're trying to win an election and you have stock markets ripping the all-time record highs, you have one of the top performing companies ever in modern history, NVIDIA, you got to be hammering on that on the media 24/7, 365, right? And again, this is not, I'm just talking about perception from business strategy. If you want to, I never hear anything. I hear radio silence. I just hear nonsense. So if the Biden administration is going to hire like a financial, would just be posting on the Twitter account, oh, great day for America. The S&P 500 hit a new all-time record high again. And I would just post that every day. I would say, oh wow, NVIDIA, overtaking Apple, $2.5 trillion market cap, leader in AI, innovation is cranking in America. It's nothing, I hear nothing. It's crazy. The perception is horrible, horrible job. Anyway, that's just my thoughts. Even though it has very little to do, I believe the President of the United States has very little, I think they get too much blame when the market's doing poorly, and I think they take too much credit when the market's doing positively. It really all has to do with monetary policy, liquidity, et cetera, but that somebody has to be a messenger and, rally the troops, so to speak. Anyway, that's kind of my diatribe for the night. Let's go ahead and make a left. This is the Havana 1957. Esmeraldas is a gorgeous neighborhood. It really is, and I love these palm trees, how they decorate them. Carl Ross's Tom Tech is holding the market, but all of the stocks are losing and doing worse than people realize. That's true. It's a thinner market. I would say it's not a super thin market, but it's a thinner market. A lot of the high beta stuff, or the junk that doesn't really, no earnings, that is still down significantly, right? When you talk about the overall S&P 500, it's a market capitalization weighted index. So when you have the massive leaders like the Microsofts, like the NVIDIAs doing so well, it takes up such a massive weighting in the S&P 500 and keeps those valuations up. But the smaller companies in America, if you want to talk about like Russell 2000, just smaller companies in general, speculative SaaS companies, they're still down from that very, very severe bear market we had that started at the tail end of 2021. You're 100% right. That's why it's, and there was a good excerpt in this book that I always recommend people read. It's called One Up on Wall Street by Peter Lynch. There's this perception that over time stocks will go up and stocks will recover. That's conflated with the S&P. Most stocks actually over time trend towards zero. Most stocks do. So if you're speculating per se, and holding individual companies, you really have to risk manage. You can't just hold that forever. I mean, look at some of these stocks or companies that performed really, really well during the COVID boom or the pandemic boom. Zoom would be one of them, ticker symbol ZM. Peloton would be another one, Teladoc. I mean, those were up hundreds of percent, if not, over 1,000%. Some of these stocks were up, but if you never took profits or risk managed those positions, these stocks are down 94%, 99%. So you're 100% right. You are 100% right. MBA Elias is, how long is the NVIDIA run-up sustainable? I don't think it's sustainable. But the old saying, markets can stay irrational longer than you can stay solvent. If you look at a daily chart of NVIDIA, and I think we talked about this, you're starting to see what's usually noted as exhaustion gaps. So when a stock gaps up continuously, running into a high, you could think about it like a car going putt-putt up a hill. Now, I'm not saying it's going to crash the next day, but I think there's some big selling going on. But that is the leader in the market, and the earnings are there. We'll see. I guess if you're trading it individually, use that 50-day moving average as your guardrail. It's really all that can be said. All right, we're heading back up Washington Avenue. We're going to go up 2 more blocks here. Well, actually 1 more, and this is going to be Lincoln Road. Shellacking, the day away. Says, I'm thinking the millions of gallons of oil released from the reserves is just a short relief. Yeah, maybe. Now I will piggyback off of that topic. So crude oil, and this is actually a more macro trend we've been wrong about. Well, I won't say we, I'll say I've been wrong about, is crude oil. I don't know exactly where it's trading today, but if you look at ticker symbol CL for crude oil futures, I think we're trading around $73 a barrel, I think. Breaking below the 200-day moving average. My thesis was that this summer we would trend towards 90. We've done the opposite. We've actually broken down below the 200-day into the 70s, which is going to be good for if we really want to get inflation down, right? That's going to bring the headline CPI number down. If this move to the downside is sustainable, it's also going to help a lot of Americans at the pump. But the question is this drawdown in crude the market forecasting an economic slowdown, so to speak? My view was that this is probably going to be the most traveled summer of all time, because the summer of 2024 is really the first year that everything is back 100%. Would everybody agree with that? Even in 2013, some people were a little bit squeamish about, the pandemic and COVID and all this stuff. I think everybody's over it 100%. Like, there's not one person that is even concerned about it in the slightest. So 2024, my thought process was travel's gonna scream. Hotel and lodging is gonna soar, which it's still doing pretty good. A lot of the hotel stocks are still trading at 52-week highs. And I thought that was gonna push crude oil higher, because you would have more demand. But it's done the polar opposite. So is this a forecasting mechanism for what's to come? Maybe continuous lighter GDP prints? I don't know. What do you guys think? Mimi says it's the bird flu now. Oh, geez. Shellacking the day away, says Tom. Diesel here in Tennessee is almost as cheap as gas. Wow. Well, that's good news. Kimberly says, true, I've got 2 vacations planned this summer. Awesome. Where are you going? Size is perfect opportunity to start averaging in contracts for the seasonality gain heading into the winter. Peter says $74 a barrel. 10.4. TM says, are the municipal taxes high in the state? The streets seem very clean. Your property taxes are relatively high, yes. Well, I'm not going to say relatively high. I'm just going to say high. They're high. But look, I honestly don't, and this is coming from a person who's conservative. I think the new generation of conservatives, the younger millennials and Gen Z, if you have a conservative leaning bias, I think the main difference is I don't really mind paying the high taxes so long as if everything's clean, if everything is safe, if the infrastructure is great, then I think I'm getting my money's worth. I don't feel as if I'm getting ripped off, if that makes sense. However, if the taxes are really high, but simultaneously everything is in disrepair, well, then we have a little bit of a problem. Like with the taxes that we pay in New York City, everybody should, I mean, with not only the New York state tax, if you live within the 5 boroughs in New York City, some non-New Yorkers may not know this, you also pay New York City tax. So you pay your federal taxes, you pay New York state taxes, and you pay New York City taxes. With all the taxes we pay in New York City, everything should be free. There should be free education, there should be free healthcare with the amount of taxes we pay, but we get none of that. If anything, the services are in structural decline and quality of life has been deteriorating. It's actually the exact opposite. But let's say if New York City, shook you down and made you pay 50% in tax, which is pretty much what it is, but we had free education, free healthcare, clean subways, safe streets, I'd say, all right, yeah, that's fine. I'm willing to pay 50% in taxes about that. I mean, wouldn't anybody? I mean, that seems fair, right? I'm getting the services, people are getting the help they need. Maybe I would say, yeah, I'm down. I think that trade is good. I think just generally the founding fathers had it correct. No taxation without representation. If you represent me, fine, charge me 50%. I think that's fair. Anyway, so I am not against high taxes. NBA Elias, taxes are tough, but various service fees are brutal, including the congestion pricing. Oh, we got some good news. Kudos to Governor Kathy Hochul. See, I mean, I'm not a big fan of the governor in New York, but I'm fair. I give people credit. I commend Governor Kathy Hochul for canceling the congestion pricing, or at least delaying it. To quote her terminology, she said, New Yorkers are hurting, now is not the time to do the congestion pricing. I think she's right, so I stand by the governor on that. Oh, but guys, my phone's gonna die, but I just want to thank you all for coming out and watching Walks on Wall Street at such a crazy, insane late hour. I appreciate everybody, and I will see you all back in New York City, the greatest city on earth, tomorrow. I had a really good time in South Florida. I had a really good time in Miami. Thank you all for liking the video, subscribing, and we will see you all tomorrow. So Alan, thank you so much. Zozo Bob, Walking Minnesota, I appreciate it. Brad's Brain, The Power to Excel, thank you so much. Paul, Dario, Jeff in Southern Tier, New York. Richard Vogel, MD, JK, New England Crypto, all of our moderators. Thanks everybody, and we will see you all in New York City. Take care.